work. But they need somebody that boss them around, besides mom.
Yeah, like I agree.
Hmm. I already hold them accountable.
And then if
That's
they
why I'm on
have,
your team.
That's right.
yeah,
Yeah,
exactly.
it's true.
And if they have trouble with their team lead, they can always come and complain to you. Mom,
Right.
you know what you're doing.
Right. Well, and I don't want them their only idea of real estate to come from me. Like, I don't. It's better more.
Yeah.
Hello, everyone.
Hello.
Hi. All right, we'll just give it a few minutes, see who dribbles
Bobby,
in.
is
I'll
it
send out a
possible on your end, please, to update this link for our weekly meeting so that we can all just join whenever we join without you having to
oh,
like
yeah.
accept us in?
So, yeah, the alternative would be a passcode. If you want, I can send out a passcode, but you have to choose one or the other. So I always choose that one because I didn't want everybody to have to remember a passcode, but I can change it to whatever.
Actually, I think there's an option in there where as long you can basically just say if you have the link, you can get in. I guess maybe that's the
That would
password
be
option.
that would be ideal,
Yeah.
honestly. Yeah. All right. While we're waiting, let me just take a quick peek at it. All
Well,
righty.
you're definitely not going to be able to change it right now while you're on the call.
Ah, that's true, huh? Okay.
Yeah.
Well, I'll do it after, and see if I can do that. Because you're right, it would be much better if you could just hop on and, you know, not have to wait. Scott is joining us. Oh, I wonder if
He said on the text that it said waiting for host to start.
but I don't see his name there unless he hopped off.
In the meeting.
There he is. Okay. Okay. Oh, missing. Oh, Carla.
Yeah, she usually can take a break at lunch, but not always.
Okay. All right, well, we'll go ahead and get started. Scott, um,
Hello.
welcome. If you want,
Am I
go ahead and start.
am I am I able to share my screen?
Yeah, let me make sure it's set on my side. I think you just go ahead and start and then I give you permission.
Got it.
Oh,
Oh,
wait,
there we
no.
go. Send
Hold
request.
on. There we go. Okay. Oh, there's Carla. Yay.
Let's see here. Where is my There it is. All right. Did it come up on the screen?
Yes, it did.
Perfect. All right. So we have our new 2026 loan limits for, well, first of all, Happy New Year, everyone. I hope everyone had a nice, enjoyable, relaxing holiday season. I know we had a lot of rainy weather, so I know a lot of time was spent inside, which was a little hectic, especially with two little ones with a lot of energy that were driving us crazy. Finally, it's like, just go out and play in the rain. All right. So with that said, Happy New Year again to everyone. All right. So new 2026 California loan limits. I'm going to send everyone a PDF copy of this. But for San Bernardino and Riverside, 832,000, 750,000 is the base loan amount for Riverside, San Bernardino County. That means after the down payment, the loan amount is not to exceed that amount. Otherwise, it would be considered a jumbo loan for Riverside, San Bernardino County. And for LA and Orange County, 1,249,125,000. That would be the baseline for what's called a high balance loan. Anything that exceeds that loan amount is considered a jumbo loan. So from 832,751 to the 1,249,125 is considered a high balance loan. I don't know why Riverside and San Bernardino don't get on board with the other counties, especially with where our home prices are. But this is the baseline loan amount. So the benefit of having that high balance is from this 832 to the 1.2 for a first-time home buyer, you can put down as little as 5% on a high balance loan. So it definitely, helps out having more room here to have a lower down payment for these first-time home buyers. And then San Diego County, 1.1 million would be their baseline before exceeding going into what's called a jumbo loan. Here's another one that irks me. FHA, we're up from 644 to 690,000. Again, whoever's putting these together just doesn't understand where our price points here are along, the foothills here all the way out. And this is a benefit, for first time buyers too, especially if they don't have strong credit scores, which would allow them to buy if they have that income. I've come across plenty of buyers that have a solid income, but they don't have the credit scores. So it puts them in this FHA category, but again, they're restricted based on the base loan amount. So for FHA, 690,000 is the baseline for Riverside, San Bernardino County, and then your LA and Orange County is going to mirror conventional or Fannie and Freddie guide or loan limits of the 1.249 million. So again, Riverside, San Bernardino County do not have the high balance loan limits where Orange and LA County do. So those are the new loan limits rolling into 2026. So it does help out, a little bit here, but this FHA one, HUD needs to get it together and get this amount increased and allow us to play ball with the other counties and having these high balance loan limits. Again, those are the loan limits. Let me go into here. Outlook for 2026. Not going to really see much change. They're calling it, the year of predictability, not relief. Mortgage interest rates predicted by the big players, Fannie Mae, your Mortgage Bankers Association, National Homeowners Association of Realtors, Wells Fargo, and the Consensus Media. And this is a number of different people put together that fall into this category. But their predictions for rates, I don't like the Mortgage Bankers one, the 6.4, but range from 6% to 5%. Your 30-year fixed rate right now, about 5.875 to 5.99. That would be with points. With no points, you're roughly at about 6.375 or so, again, depending on your credit product and rate. They're calling it, the new normal. We had that from 22 up until kind of the beginning of this year where it was the new normal. Rates were in the 7-8% range. Now we're gonna hover in this predicted 6 to 6.4% range. But again, none of us has that crystal ball, so we don't know exactly what's going to happen to rates. A lot of it will play into, again, inflation, job creation, and those job reports. So depending on what those do will determine if these rates will come down lower. Now, for your Govy products like your FHA and VA, we're seeing those rates down into the mid fives. So we're still really good on rates overall compared to where we have been. But this is the outlook of what we're looking at for 2026. Their 2027 predictions or projections. This will change as the year goes on as well. This is just a prediction based on going into this year. Um, I feel like we're going to be lower, definitely lower than this by 27, even, later this year. But this is, kind of, where we're at now. So the game plan is, for these borrowers, and it's going back to what we've been doing over the last few years. Going over, and I'm putting some charts together, and I'll share it with you. But the cost of waiting, you know, we've I know I heard it quite a bit these last couple months that I'm going to wait for, rates to come down. But of course, when those rates go down, if these prices do go up, they may get a lower rate, but it's going to cost them more in the long run. So we just have to be proactive in giving the correct information, data that we can provide, utilize each other more as a, team to help educate these buyers and customers that we're working with. But still, a 6% rate compared to where we've been the last couple of years, I think is still a strong rate. And again, the ones that can see the benefit of buying now and foresee what will happen to the market when these rates do come down and see the appreciation of the homes, going up, they're going to make a lot more money than in their home and their equity and appreciation than sitting and waiting to pay a higher price on a house just to get a lower rate. I know there was the term, date the rate, marry the house going, that everyone was using that term. I mean, I think it's still valid, but I think how I've proposed it in, over this last year is, yeah, you know what? We really thought rates were going to come down a lot sooner than they have. We can't predict when, and I'd say, I can't predict that rates are going to be here, but I do know at some point you will be able to refinance that mortgage. So if you're comfortable with the payment, the house checks all the boxes, you can budget to make that payment work for you. It's definitely going to benefit you more in the long run than still throwing money away, paying rent somewhere. So that is the rate outlook and loan limit update as part of the upcoming year. Lastly, I know I've seen some messages going through. I think Monica's been sharing, Chas, you've been sharing. Definitely follow up with past clients over this last year, even 2 years. Share the market update with them. Share with them what's going on. Share positivity, like, hey, rates are coming here, because most consumers don't know our business. We're the professionals. So when they're saying, "Oh, I can't wait for your rates to be, 4% or 5% or whatever the case is," let's share the positivity with them. Like, hey, they've come down, 2% since 2023 or, beginning of 24. just having those conversations and reopening those doors to get them excited about maybe reconsidering. Well, maybe it's not such a scary thing or such a bad thing to look at what I qualify for now, or what it looks like, especially when you're comparing it to to rents that are being paid. I just had one on a file that I'm working on. I couldn't believe we had to do a rent survey on it, and it came in at $3,500 a month. And I mean, it's a condo in Riverside. It's got like 400 and something dollars a month HOA. So I mean, when you're looking at buying a house, yeah, it may not be in your preferred destination, but if you can leverage that to buy the next property, that's what we're here to educate and go over with them. It's about building wealth through real estate, not just a one-time thing, and going over it being an income vehicle for them. Monica, did I see your hand up?
Yeah, what I was going to mention is, and I'm sure you guys have probably heard this from your people, but the reason I was even asking you about my past clients who were interested in refinancing is because they get all these emails from
Mm-hmm.
other lenders
Mm-hmm.
saying, hey, it's time to refinance. It's a good time to refinance. Here's what's going on with the rates. And of course, some of the numbers that they put out there are crazy low because they're on some kind of a special program with, you could buy it down to. But it gives them a false sense of, I think, what's happening. And so when they were asking me, oh, this says we can get a 5%, I'm like, I don't know.
Yeah. I literally just had this morning, a client of mine. We've been waiting, to refi. He, wants to save on his payment. He's like, is this true? He's like, I just got this from your company. And when he sent it to me, I'm like, I see this one all the time. So it's junk mail that goes out. It's from some kind of call center that sends out these mailers. And in fine print, it says not affiliated with your lender. And then in big bold, it'll say, rate 4.99, APR 6.1, or whatever that is. When I see that, I already know, because I've seen these for years. They put the shiny object dangle in front of you. You see that rate, but then there's that huge cost. And a lot of times they're charging 2.5, 3 points to get these rates, which in turn doesn't make sense for the customer, because if you have a $600,000 loan, that's $18,000 in just origination fee that you either have to come out of pocket with or roll into the loan, plus your regular refinance cost on top of that. So if you take the interest that they've paid over X amount of time, and now you're going to add another $18,000 on with those fees, it doesn't make sense. And that's where the consumer not knowing what's going on. And I'm very appreciative that I get a lot of clients that call and ask, and like Monica, you had reached out. When you see these things, banks, lenders, they're not in the business to give things away for free. So when you see that shiny object, there is cost associated, with it. And that's why I always say, they send me I'll say, send me a picture of what you got when they ask. And then they'll just regular send it. And then I say, okay, let me see the backside of it. And then in the fine print, it says, based on you having this credit score, this loan to value, this term, this product, and this is going to cost you 2% or 3%. So that's definitely where, you have to be aware of those things. So definitely it's about educating the consumer. And Monica, you did the right thing. They reached out to you, they asked you the questions, we discussed it. And then same with like a client that I got today. But as rates start to trend down a little, more of these companies are going to start sending out, and they will get people, because people don't see it costs them more, or they just say, I don't care, I'll just add it to my loan, but it doesn't benefit them in the long run. So that's where we come in as the professionals to educate.
I have a question, Scott.
Yes.
Recently in KFI radio, I heard a commercial about if your loan is more than 499, then refinance, and or they don't you don't have to pay all the refinancing fee, none of the fee. How does that work? And is that something
They
we
get
can rely on?
it's a tricky play on word. You can use the word no cost refi because they're rolling everything into the loan and the borrower's not having to come out of pocket with any money. So it's no cost to them, meaning they're not having to come to the table with money. So all those fees and things are rolled into the loan. Again, a bank and lender is not going to do things for for free. So it's being paid somewhere.
So basically, what you're saying, they roll into the loan. That means, let's say I have 500 original, and then when I do refinance, no cost, it's become 525 maybe.
Well, I mean, it shouldn't be that high unless, again, you're paying like a large amount of points for that interest rate. I would I would say, on a standard, refinance, your loan amount shouldn't increase too much. Because on a refi, I mean, the cost, if you're rolling in impounds, your taxes and insurance, depending on the time that you're closing during the year, it can cost more. But your title lender escrow fees are very minimal on a refinance. It's just those impound where it really brings up the cost depending on what those amounts are. If you don't have an escrowed account or impound account, then it should be very, very minimal.
But if I don't look at the impound account, but the loan amount should increase if I wrote in the
Yeah, if
yeah,
you rolled,
okay.
yes, your loan amount would increase. So it would increase anyways because you have your base loan amount, and anytime you pay off your current loan, the loan servicer is going to charge you payoff fees. So you're going to
Uh,
pay an X amount of days of interest. There's going to be their small like junk fees and things. So yeah, the base loan amount would increase a little bit, and then you as the borrower have the option to roll all the cost into the loan so you're not coming in with anything out of pocket, or um, it would be structured to where you have X amount in this account that's going to wash the amount that you're coming out with. Or you typically, the way our refis are structured, you come in with your mortgage payment. So if we're refinancing now, instead of sending January's payment to the servicing lender, you would bring that to escrow to close the escrow, and then your loan amount would increase roughly about what the payoff would be from whatever lender it is, whatever those fees are that they're charging.
okay, so
Scott,
basically
would
no
you,
free lunch, right?
Scott, would
Yeah.
you be open to doing a little like live Facebook or even like a YouTube recording where we're just talking about like how the refis really work?
Yeah.
Yeah, because I think that's really good information to put out there.
Yeah.
Okay, cool. I'll call you.
Yeah. Okay. Yeah. Let me
We'll
know.
we'll we'll set something up.
Okay. Cool. Yeah. Most
Okay.
definitely.
Okay, good.
All right. With that, that's what I got for you today. Any questions or anything for me? Oh, just so I know I've talked about this like a few weeks back. I got an email so my brother-in-law with NPHS. The new program is called CalHome. He got added duties to his position, and someone else took over running the products. Their name is, I'm looking at, where's the email? Starts with a C. Anyways, I was having a conversation with them on the 19th. They were supposed to set up something with me to go over this CalHome and the other new products that they have through NPHS. I've not heard back. I reached out yesterday. I said, all right, holidays are over. Like everyone's back. Like let's get the setup. So
Oh, yeah.
I don't, I'm going to see if they can just do a Zoom and hop on with all of us instead of me doing it third hand.
Yeah.
Otherwise, if not, I'll get the information and share it.
Yeah, that would be great if they could do that.
Will do. Chrismal. Ciara Chrismal is the person's name. is now the director of community lending and investment. So he said they have the Cal Home, the Imperial County, which we had talked about, and several other DPA programs that are currently available. So I am still working on that to get them lined up. So with that, if anyone has any questions, otherwise, Happy New Year to everyone, and I appreciate all of you. Thank you.
Thank
We're gonna have
you.
a big year. We're gonna have a big year.
Thank you, Scott.
Thank you.
That
Thank
was a
you.
great presentation and we really appreciate it.
Yeah, thank you, thank you.
All right, Monica is going to be talking about the, remind me again, I can't remember.
Writing the offer.
Oh, writing the offer, yeah. So we've been talking about different topics in progression, and this would be the next step in servicing the client. So with that, I'm going to turn it over to Monica. Monica, thank you so much.
Oh, of course, of course. And I think in the email that Bobby sent out about today's call, there's a link to the worksheet with all my notes on this topic. And then also some samples of like the cover email that you would use when you send your offer to the other listing agent. I feel like that's a really important part of it. But I guess
Would
what
you
I
like me
wanted
to
to
share it?
if you can share it on your screen, that would be great because I'm on my phone right now.
Okay.
And I am not sure how to bring it up on my phone to share it.
Okay, I'll work on it, but yeah, go ahead.
You know, just think of like, okay, well, everything I'm telling you right now, you can go back and you can look at the notes and everything's going to be there, so that you can kind of refer back to the details. The main things I wanted to focus on are that if you're going to be writing offers and you want them to be winning offers, because right now, okay, the market is a little bit slower, but, and that's a big but, half the offers I've written recently ended up with multiple offers on those properties, not just one or two others, but many others. And so if you're finding good deals for your client, as you should be, if you're finding homes that are great for them and that are ideal for maybe many others, you're probably going to be competing. And even if you're not competing with other buyers, I think it's really important to try to put your best foot forward, right, in writing these offers so that it can get accepted as easily and as quickly as possible with as little pushback as possible, right? The less friction and pushback you have right from the beginning in working with the other side, the better the whole thing's going to go. So in writing a great offer, you want to take into consideration some prep, getting all of your information ready in order to write an offer. That means running a really good CMA, make sure you understand the values and that your buyer understands the values, because if they just going based on what it says on Zillow and they say, well, Zillow says it's worth this, so we should offer this, then that's not exactly a great strategy. So make sure you have a good CMA, check things like days on market, price reductions, and then the nearby closings in the area. And the reason I say that is because you want to see, are things moving quickly? Are things sitting on the market a long time? Are homes bouncing in and off of escrow? This property, has it gone back and forth into escrow? Have there been price reductions? Things like this are going to give you a lot of indication of how motivated the sellers are, how willing they are to make a deal, and whether the market is pushing for that, right? If there's a lot of competitive properties around there, then you have a little bit more room to maneuver. But if not, if it's the best one and all the other ones are horrible deals or horrible houses, then there's probably going to be a lot of interest in the property you're looking at. So just take those things into account when you're coming up with a pricing, with a strategy for how you want to make an offer. And this is the things that you're going to discuss with your client, right? Strategy for, do we come in at the list price or not? And a big factor of that is calling the listing agent first. If you're not doing that, you absolutely need to be doing that. If you can't get them on the phone, then you text them and you say, please call me. A lot of times they won't want to answer their phone, but you need to ask them, hey, I want to make an offer on the property, but I have some questions I need answers to first. Please call me, right? Get them into a conversation and find out what is the most important thing for the seller. Is it price? Is it time? Is it certainty? They want to make sure that you're a solid buyer, or they want to make sure that you're not going to ask for a bunch of repairs. Or perhaps they're in a situation where they're also looking for their next property. They may or may not have found it, and there may be some request for flexibility on the closing timeline, or maybe even a rent back option. So you need to ask these questions and find out anything you can from the listing agent. I think the best way to do that is to ask a couple questions and then let them talk. The more they talk, the more they tell you. So just be friendly, you know, try not to have that first conversation be super businessy, be friendly. Tell them how great the house was. Tell them that your buyers liked it, all that stuff too. But have it be a back and forth, and don't be too harsh right up front, right? You wanna be, make them feel like you're gonna work with them on this deal versus against them right from the start, right? And so get your information together, come up with a strategy with your buyers for how you want to come in with your offer, and strengthen it as much as possible by providing whatever information you have available about either their loan pre-approval from the lender, or like a very clear proof of funds if they're doing a cash offer, or even if they're not doing a cash offer, sometimes showing proof of funds of at least the deposit with the pre-approval can go a long way. And loop the lender in. I always loop Scott in when he's our lender, and I do that with anybody that, you know, regardless of who the lender is. I loop them in on that email when I send the offer. I say, and I mention the lender's information, because not all lenders do this. Scott, thank you for the fact that you do, but it's helpful for the lender to then follow up that initial offer email and say, hey, you know, this client is very pre-approved. Here's their situation, or we're ready to go with them. They have it. We have everything. Just makes them feel more comfortable, right? When they can communicate directly with the lender. So, you know, show them that the financing is solid. And as far as structuring the actual offer itself, when you're talking to the buyer about the best way to do this, I think it's important to keep in mind whether or not there might be other multiple offers. And if you've spoken with the listing agent, you may have gotten an indication about this. One way I like to ask that question is not how many offers do you have, or what's your highest offer, because they're not going to tell me that, right? They're either going to lie, one, or two, they're just going to be super vague, or they'll say, well, we've had some offers, or we have offers, or we're looking at offers. They're not going to tell you an exact number because they want you to go as high as you possibly can. Other times they do tell you an exact number because they're hoping you'll go above that. Whether or not they actually have an offer on the table for that amount, I don't know. And I'm not going to know. There's no way for me to know. I can't ask them, show me your offers, right? So you have to kind of take the information you get with a little bit of a grain of salt, right? You can't ignore it. If they're saying they have multiple offers, they probably do. But if they're being really pushy or specific about, you need to come above this number by tomorrow and include these terms in order to win, well, that may or may not be true. In my experience, it's true about half the time. So that may just be them trying to bully you into a very specific corner. So when you're discussing this with your buyer, you don't need to give them all of this information because it can be overwhelming for them. but you need to figure out what's a good strategy and then suggest, and then let them see, does that work for them? If not, why not? And then adjust from there. So take some things into consideration when you're writing the offer. It's a very standardized form, right? So it's not like you're writing, there's no new language you're putting in there, but you want to keep it as simple and clean as possible whenever you can. So if you have an ideal buyer who has the financing in order, doesn't want anything special, and is just willing to say, okay, here's the price we're going to give you and here's the closing date, then just do that. Don't add or pretty it up with any extra requests and things like this. Just keep it as clean and as simple as possible whenever you can. And try to align certain factors with what you heard that the seller wants or needs based on what the listing agent told you. For example, like if they are requesting a longer closing or a shorter closing, if they're saying they want contingencies removed quickly, try to hone in on those things as much as you can when you're putting together the numbers. In my experience, the lender appraisal and inspection period, they're all default right now to 17 days on the contract, right? That's fine. You can make that work. Truth is, the lender can probably work with 17 days. They might need a couple extra days here and there, depending on how pre-approved they are. The appraisal can happen easily enough. There's not a ton of activity in the market. Appraisers are coming back pretty quickly. Inspection period, honestly, I've never needed more than 10 days. You know, you can get an inspection done pretty quick. And if you ever need to extend those timelines, you can always ask for an extension because of something that happened, right? Like, oh, we had our inspection, but we found out there's a roof issue and now we have to get a roof guy here. And that's going to take an extra couple days. You can always ask for extra time. I don't see anything wrong with that. So try to meet the seller's requests for those kinds of things up front whenever you can. The other thing I want to mention that's important, and I didn't actually put in my notes because I forgot at the time, but I remembered it this morning. I wanted to bring it up. There's a section now on the contract where the buyer can ask the seller to cover our cost, right? So we have a contract now with our buyer. On there, it has a specific percentage. I always say start at 3 because, you know, it's easy to go down from there if you need to. When you're requesting that the seller cover that amount, even if you know that they're probably not going to want to give you 3, put whatever is on your contract in that section. And the reason I say that is because if they come back and counter and they say, oh, we're not going to give you 3, we're going to give you 2.5 or 2 or whatever, fine. Now you have something in writing that says, here is what the buyer owes me, and here is what the seller is going to cover. And now now escrow knows what to do with the remainder, which would be for the buyer to pay. Or you can modify your contract with your buyer to whatever amount in between there that you want, right? That you two agree upon. I always try to get the buyer to cover that difference. Quite frankly, a lot of times they can, but I don't want to have that discussion of you're going to be okay with accepting less before the offer's been accepted. Don't have that discussion when you're making an offer. Have that discussion after they have an accepted offer and they're super excited that you got them an accepted offer and that they're going to get this house. At that point, they might be willing to give you whatever you want, right? So don't have that discussion before. Put your full amount, whatever is on your contract with your buyer in that request. And see what the seller says. You never know. They might be having a great day and say, I'll give you what you want. Hasn't happened yet, but one day I'm sure it'll happen, right? So that was one thing I didn't have in my notes. I just wanted to mention that because I think that one's important because we now have to go in there and ask for that, right? And now you don't have to, by the way. The buyer can choose to just pay you directly. They don't have to ask the seller to cover any of that amount. So up front, you can let the buyer know do you need me to do that or not? I think by that point, you probably will have already known based on other discussions you have with them. But I just wanted to put that out there.
Monica, before you continue, can I
Yeah.
have a question about that?
Yeah.
Let's say you sign contract with your buyer at lower with the percentage. Can you doing the proposal and ask for more?
Nope.
So it's always at whatever signed contract with your buyer.
Yes. So the contract you have with your buyer representation agreement, if that is at 2 or 2.5%,
Okay.
you can only ask the sellers to cover up to that amount. You can ask them to cover less, but never more. Now, if you want to revise the contract that you have with your buyer mid-contract, let's say you started working with your buyer, you went and looked at a whole bunch of houses, you made a whole bunch of offers, you have to renew it, right? At that time, you could ask them, hey, we've been working on this for so long. And we've been seeing all these places, and yeah, I want to keep working with you, and let's renew it, but I want to change my fee because I've already spent so much time on this. That's fully appropriate. You can do that then. But whatever your contract says with your buyer is the max that you can try to get from the seller.
But so let's assume for a minute, do you agree with the buyer at 2%?
Okay.
And then the buyer, the seller come back, say, I'm not paying 2%, I'm paying 1%.
Okay.
And the buyer's not agreed to pay the difference. Can we at that time modify the buyer agreement to 1%?
You can. So this is actually something I did recently on the escrow that I have right now. I started at 3 with my buyer. We went and looked at a property. We asked for 3 with her offer. The seller came back and said they would only pay 2. I was like, okay. I didn't love that. I was willing to maybe come down to like around 2.5. I spoke with the buyer and we settled on 2.25. It wasn't ideal, but it was better than 2, right? That gave me an extra, $4,000. So yay. So I modified my agreement with the buyer for 2.25 instead of 3. And now escrow knows the seller is going to cover 2 and the buyer is going to cover the 0.25.
Okay. All right.
Does that make sense?
Yes. Thank you.
Okay. Yeah. So you can modify your agreement with your buyer anytime. I just don't suggest you have that conversation or try to make those kinds of modifications before an offer has been accepted. Wait until you're in escrow and they're happy they're getting a house. Okay, moving on. Terms.
I do have a question, Monica, actually, and it might be more for Scott too. Like typically in those transactions to get my compensation covered, oftentimes I'll put it in the price of the home. That's kind of the old school way. But with the new lending terms, Scott, how would you best see that done? Is there a preferred way?
As far as the compensation being paid?
Right. So say we come up against, because usually I do old school and I just put it in the price of the home. If I
Right.
want my compensation paid, I up the price of the home a certain amount so it doesn't come out of the buyer's forefront. It's kind of rolled into the loan. Some buyers would rather pay. I guess it depends. It's circumstantial. I was wondering on the lending side of things, with the new law in effect, how does that work with you guys? Is there a way that you say, 3% compensation is?
So if the borrower is paying it, whether like you said, it's just rolled, it's the price, and there's nothing additional out of pocket for them because it's in the price, or if they're paying you directly because the seller's not covering anything, it just gets listed as a fee on the settlement statement. It cannot be rolled into the loan.
Right.
And it's listed as them paying it as agent compensation, but it doesn't count towards Section 32 or a high cost loan. That fee
Okay.
doesn't count towards that.
Okay, that was kind of my question, right? It's not really gonna go against them in underwriting or anything like that, correct? Okay,
As long
oh, good
as
to know.
as long as they have enough verified assets to cover everything that's needed, that's what's looked for.
And yeah, and
Wonderful.
you know, Chaz, I kind of feel like sellers understand the way it works now. I don't know that they probably did before too, but you know, they realize when they're pricing their home at a certain price that they're gonna be asked, you know, by buyers to cover that agent fee, you know, so they're pricing it accordingly. I don't know that um I don't know that we need to be increasing our offers in order to give them more for that because that should already be built into the price. But I guess it's always an option. You just can't, you got to be careful with appraisal coming in because their appraisals are coming in tight and low these days.
Sure, sure. And of course, it's always circumstantial to the market. I mean, right now, like today, that isn't what I'm doing because, I mean, honestly, Scott and I have done some where we've done them and they're paying all the, I mean, we're getting 40 to 50,000 credit, you know,
Yeah,
from these.
yeah,
I mean, yeah, it's definitely not the time now that we're seeing that, but we see the market changes, right? And when there's competition and a buyer really wants a home, sometimes we've been forced to up that price. And so I was just wondering from a lending perspective what that looks like and the best way to present that. I think you answered it for me, Scott. Like I didn't know if it was frowned upon, if it was going to hurt them in the end, if they're coming in, you know, having to come in with that compensation. But it looks like it could go either way. Right?
Yep. Hmm.
Awesome.
sweet.
Yeah, right now you're absolutely correct, Monica. Right now is not the time that we've had to buffer those.
Yeah, the sellers are really giving out credits like candy.
Agreed. Yeah, it's nice.
They're like, what would
Mhm.
you like to buy my home?
Yeah.
Right,
Yeah,
for
definitely.
sure.
You know, so I mean, there's always exceptions to that rule, but yeah, I definitely seeing a lot of that. And if you go and look at comps, by the way, whenever you go and look at comps to do your CMA, you can see now what was paid out as concessions, not just to the other agent, but in other types like repairs and whatever other closing costs that the seller covered for the buyers. You can see those amounts there. And if you kind of take an average for your area, it gives you an indicator of, you know, what this buyer in your situation, you know, when you're going to make an offer, what they might do, what might be more typical for the area. So definitely take that into account for sure. Yeah.
Yeah.
Anyway, moving on to terms that help your offer get chosen, right? Some of the things I had here are short and realistic time contingencies. So tighten the timelines whenever you can for inspections, loan, and appraisal, especially if you can, if you have that option. Sometimes you don't, but if you can, tighten those timelines. I think most sellers feel really, really comfortable once they know appraisal and inspections have gone through. Now they're like, oh, okay, I can breathe. You know what I mean? Because those are the two biggest sticking points usually, you know? So they feel like if they can get past those, they don't care if it's a long escrow. They just want to get past that point, right? Appraisal gap and earnest money deposit. Earnest money deposit, I would recommend, should never, ever, ever be less than 1%. Ideally, 2 to 3. If your buyer has the funds and they're going to use it towards closing anyway, put it down. It shows them that the buyer is solid and serious, right? They're not throwing around offers with like no money. And an appraisal gap, being able to cover that's not always possible for most buyers. But if you do have the ability to do that as a buyer and you know that you're making offers on a home where there's multiple buyers trying to get the home and you want to stand out, that may be a way that you can do that and say, if the appraisal comes in up to a certain amount under our accepted price, this is what we can cover. We can cover that difference, right? If you really want the house, you can use that as leverage. You can also use that as leverage in a counter. Maybe you don't have to put it up front, but it's something that can go a long way, especially if the seller is concerned about the appraisal coming in low for whatever reason, right? Maybe they added on a bedroom, but it wasn't legal or something, whatever. There could be different things that might make the appraisal come in low. So if your buyer's really wanting that property and they want to stand out, that's something you can do. And then limit noise requests like excessive requests for personal property or repair requests right up front. Not a good idea. There's no even reason to do it in an offer. Even if you know you're going to ask them to repair something, don't put it in the offer. Get them to work with you first. Because once you do inspections, you might find out other stuff too. And you might just want to walk away, or you might want to do something different. Hold on, I got to plug my phone in because I think she's about to go. So, charging. Okay. So, yeah, keep it simple. Try not to ask for too many things up front. And then if you get back counter, right? You haven't you're either going to get back a simple counter offer to your offer, or you're going to get back a multiple counter offer, right? If there's multiple offers out there. Usually on the multiple counter, they're either going to say, we want this number instead, or they're just going to say, come back with your highest and best. If they're saying highest and best, it means they're trying to push everyone, right? And they really don't care about your terms. So responding back with changes on terms might not help. At that point, it might be good to try and have another conversation with the listing agent to see, how high do I need to come back with my highest and best? Try to get whatever information you can out of them if they come back with some lame counter like that. I really hate those kind. Like, just give me a number. Let us know what we need to shoot for here. But they don't always do that. So try to clarify as much as you can. Having another conversation with them is ideal. Asking them, hey, what if we changed this timeline? What if we added this in? What if we changed this term? Would that make a difference for you guys? Try to really push for any details you can get from the listing agent if they send you back a counter. And try to adjust in priority. Usually price or appraisal gap, if that's safe for your buyer, is the thing that is most important to the sellers, usually. Contingency timeline or the strength of your loan approval. Again, that would be probably second. Flexibility or rent back options, things like that would probably be third. And then smaller things. If you can't do any of those things, if you can't change any of those factors, try to do at least something like maybe waiving a home warranty, because the buyers can always get their own for $500. Or letting the sellers know, hey, if you want to leave some of this major personal property here, because you guys were saying you are having a hard time moving your stuff, it's okay, you can leave that stuff. Or anything you can to kind of sweeten it. Whenever you can, try to come back with something that you can, I don't know the best way to say this. You always want to try as much as you can to come back with something. Not just, there's no, in my opinion, there should never be just a no in real estate as an answer.
Right.
If you say no, you're not even trying. You know what I mean? Maybe the answer is no, but what if we did this? Right? Until the other side walks away, keep trying, because you never know. And in the worst case scenario that they do pick one of the other offers, if there's multiple offers, always ask to be a backup, to stay on as a backup. Will you accept our offer as a backup? Just in case. You never know. And if they say yes, then you're in first position. In other words, they can't take it back, right? It gives you an in if you're willing to wait. Or if you just want to keep it on the back burner, right? So I always say if your buyer really wants it, always ask for being in that backup position, and not just verbally, but get them to accept it as a backup offer. Um, remind buyers. Oh, in a situation where there are multiple offers, when you guys are considering countering, if you get a counter, right? Multiple seller counter and multiple buyer counter offer. Seller multiple counter offer. That's what it's called. trying to visualize the form in my head. If you get one of those and you know you're competing against other buyers, that's when it's really, really important to not just go back to the previous discussions that you had with your seller, with your buyer about what is okay with them, what are their limits, things like that. But to really make them understand that until you have sent a response back and then the sellers have actually signed that response, nothing is accepted. So you have to act fast, and you have to act with your best foot. Usually there's never going to be more than one back and forth because sellers don't want to do that. It's rare when that happens more than once. So if they have multiple people and they get answers back from those people, they're going to pick one. They're not going to go round 2 and 3, not usually anyway, right? So you really want to try to coach your clients, your buyers, to come back with the best that they can do right at that moment. And as quickly as possible, because sometimes just being the first one back means you get it. Because others will lag for whatever reason. Maybe they have a whole bunch of offers out. Who knows? Not your problem. You just want to be the first one. And some of the other things I put on here. What did I say here? Language and communication best practices. So framing offers as solutions. When you're talking to the listing agent on the phone, or when you're writing emails, always use language that is showing how what you're offering is helping the sellers and the listing agent, based on the information that you already know. For example, this buyer can close in 21 days and offer a 30-day rent back so your sellers can find their next home calmly, right? You want to not just show the details of your offer, but go a little out of your way to explain how this is helping the sellers. And the reason I say this is because not all agents are built the same, right? Not all agents are good at their job. And the listing agent may suck at his or her job. They might take your offer and just forward it over to the guys. Not explain anything, not show the good parts, the bad parts, not review how it really helps their situation. They might not do any of those things. So I think in the email that you send the offer in, and then also when you're speaking to the listing agent, it's really, really helpful to go that distance and do that explaining, because they're going to use that same language to sell it to their own client. And they might know a good way to do that already, or they might not. And you might be helping the situation by providing that overview, right? That perspective. So make sure that you always put it in that light whenever you're talking to them, because that's usually how it'll end up being presented to the seller. And try not to use language like, we need an answer by tomorrow. Or try not to use super pushy or pressury language. Don't misrepresent the buyer as in, oh, they're fully approved, everything's solid, we're just ready to close, when they just got a pre-qualification yesterday. Don't say that. Don't say that they can do one thing, but you don't know that that's true. Don't promise things you cannot follow through on. It's better to underpromise than to overpromise and not be able to deliver. So just be mindful of that. I know it's in our nature to want to make our offer and our clients look as good as possible, right? We want to paint it in the best light, but don't overdo it. Just be careful with the language on that. And also be careful with saying things that might be considered um, I guess against some rules about, um, what is the word I'm thinking of here, Bobby? When, we're trying not to say that our client is, in a specific group or a specific type of person.
Oh, yeah, discriminatory. We don't
Yeah,
wanna
we don't want to
discriminate.
use language that may be considered that way. So, when you're, explaining, I have a buyer, I have a couple that it wants to buy your home, right? Um, you don't have to go into specifics about the personal information of the buyer. In fact, you really shouldn't. That's
Shouldn't.
private. But, when people say, "Oh, my client, she's such a, a person of I don't know, maybe they're very big into going to church, and you know that the seller is also, and you want to have them connect on that. Well, that may or may not happen, but you're not the one who maybe should be doing that, right? um, if they're a family, you could say that it's a family. You don't have to obviously lie and say it's one person, or, an unmarried couple. You don't have to do that, but you don't have to go on and on about what a great family they are, just to point out that because you think the seller wants to hear that, right? We just want to be careful with that kind of language, especially in writing. So
Mm.
maybe when you're talking to them, that's one thing. But in writing, just be a little more careful about that.
We
And
actually have to be really careful, Monica, with that, because that is, even now, they even ask whether or not they're accepting buyer cover letters or those kind of things, because there's so much litigation in that.
yeah,
I kind of steer away from that completely, personally.
yeah. Even the cover letters, the buyer love letters, that's what they used to call them, right?
Mhm.
On occasion, I've had buyers ask me, "Do you think it'll help?" We really want to tell the sellers how much we like their home, right?
Sure.
And I say, I think that's totally fine. But I always coach buyers, if you're going to write a letter, don't write specific information about yourself. Just talk to them about their home, what you liked about it, what you liked about the neighborhood, that you're looking forward to potentially moving there, that sort of thing, right?
Yeah.
Keep it about their property and what you saw there. And I think it's very okay for me to include something like that. And I always tell the listing agent, I have included a little letter there from the buyers, to the sellers. If they have expressly told you not to show them this, do not include it.
Mhm.
And I tell them that, and I put it as a separate attachment, right? But it rarely have buyers even asked me about these letters. And if they don't mention it, I don't mention it.
Right.
Like you, Chaz, like I try to stay away from it if at all possible. But if they ask, I say, okay, just be careful about how you write it. And I just say,
Yeah.
I'll review it for you. If I feel that there's something wrong there, I won't include it, or we'll change it.
Yeah.
Yeah, we have to be careful on those.
All right, well, I'm sorry to interrupt, but we are going into overtime. I just want to make sure that everybody is okay with that, or do we want to stop here and maybe go over the rest at our next
Actually,
group?
that was all that I had. The rest covered how to write up the cover email that goes out
Oh, okay.
with your offer. So usually,
Okay.
obviously, there'll be like that pack, from CAR with all the forms. I'll
Mhm.
include that. I'll include any pre-approval stuff, and then it'll all go into an email that goes to the listing agent. Yeah. So there's details on how to write up the email. There's kind of
Oh, good.
copy paste.
Yeah.
There's like
Okay.
copy paste wording that you can use, and then some tips on customizing the language there if you need to. And then I put kind of a do's and don'ts on language, and then an actual example of an actual email I sent out with one of my offers. So
Okay.
you
You are
can
so
see
good.
what it looks like.
That's great.
Yeah.
Okay.
Great
So
job.
that way, when you guys go to write one, you don't have to like rethink it. You just use a template like this, and then just change what you need to change, But make sure you change all the names and numbers and addresses.
That is important.
I've
Otherwise
so
you might be
accidentally done that and like in the past and then accidentally like left out one thing wrong and I'm like, oh God.
Yeah, great. Thank you so much.
This is wonderful.
Is it in my email?
Thanks,
Did you
Monica.
email it to all of us?
I did. I sent you a link, but it went to your CalCurbs email.
So
I was
the,
looking in there. I didn't
Didn't
see
see
it, but
it?
I could be missing it.
there was an
Okay.
email that was sent on Monday regarding our meeting, and I think that's the one that had the attachment or the link at the bottom. And then there was another email that went out today.
Okay.
And that had the
Okay.
link at the bottom too.
Okay.
I
Well,
wonder.
we'll look for.
Yeah, I'll find it. Thank
We'll look
you.
for it. All right. Well, thank you so much, Monica. This was a wonderful presentation and so helpful. I'll make sure that everybody gets a copy of this handout if they didn't already.
Do you guys have questions?
No, I don't, Monica. Thank you. It's very good.
Yeah, thank you, really, for simplifying it.
Mm-hmm. Yeah, great job. All right, well, I just want to say a quick reminder, we are actually not a reminder, a change. We are rescheduling the workshop for the vision board and goal setting workshop. We had that scheduled for this coming Saturday, the 10th. That will be rescheduled to the,
You said 31st?
31st, so the last Saturday in January. I'll send out a reminder about that with the new date. It's also going to be opened up to anyone who wants to attend. So we're kind of changing it up a bit. So if you wanted to bring a friend with you, they are completely welcome to attend as well. There is no cost to it. All the materials will be provided to you, as well as a breakfast. So please come. Historically, it's been a really great event. So I look forward to seeing everybody there.
Thanks,
All right.
Bobby.
You're welcome, Trina. Everybody have a wonderful afternoon and we'll see you next week.
Thank you. Bye.
Guys, see you later.
It would come from business development, right?
Yeah.